6 months into 2026, one thing has become abundantly clear. Markets don't wait for certainty. The first half of the year has taken investors through geopolitical conflicts, key policy decisions, shifting global narratives, and changing market sentiment. June was no different. Hopes of easing tensions through a ceasefire briefly lifted confidence, only for fresh developments to remind us how quickly the narrative can change. Both the RBI and the US Fed Reserve chose to keep interest rates unchanged, while investors now have to shift their attention to the upcoming Q1 earnings season. If the first half of the year has taught us anything, it's this. Markets react to news every single day, but wealth is created by staying invested long after the headlines have changed. That's exactly the philosophy behind every portfolio we manage at Ithought. While each strategy serves a different purpose, they're all built on the same foundation: quality, discipline, and a long-term investment process. So instead of only looking at this month's numbers, let's also understand what each strategy is designed to achieve. Our flagship strategy, Solitaire, is built for investors who believe that quality should never go out of style. The portfolio invests across market caps, but every investment must meet one common criterion: it should be a market leader. During June, Solitaire delivered 1.74%, broadly in line with the S&P BSE 500 TRI, which returned 1.73%. While the monthly performance remains steady, the strategy continues to reflect its long-term strength, having delivered 19.36% CAGR since inception. With meaningful exposure across financial services, FMCG, capital goods, automobiles, and healthcare, and a portfolio largely comprising of debt-free businesses, Solitaire continues to focus on consistency over excitement. Because in investing, avoiding mistakes is often just as important as finding new opportunities. Next up is TRUBLU. TRUBLU is about staying with India's strongest businesses. Built exclusively within the Nifty 50 universe, the strategy follows a simple belief that market leaders have the balance sheets, management quality, and resilience to navigate changing economic cycles. June saw TRUBLU deliver 1.19% compared to 1.67% for the Nifty 50 TRI. While the one-year return stands at minus 7.45%, the strategy has continued to compound at 9.29% since inception. More importantly, TRUBLU has maintained its objective of providing investors with a relatively stable large-cap portfolio, supported by leaders across financial services, automobiles, FMCG, oil, and healthcare. Markets may rotate between sectors, but strong businesses tend to remain relevant across cycles. While large-cap investing is about stability, VRDDHI represents the search for tomorrow's leaders. Small and micro-cap investing is rarely a smooth journey, and June reminded us of exactly that. Yet, even within this volatility, the strategy delivered 2.12%, outperforming the S&P BSE 500 TRI, delivering 1.73%. Although the one-year return remains at minus 10.99%, VRDDHI has compounded at an impressive 17.55% since inception, reflecting the long-term potential of businesses discovered early. The portfolio continues to focus on companies that are often overlooked by the broader market, businesses with strong governance, healthy balance sheets, leadership within niche industries, and in many cases, very limited analyst coverage. It is this research-led approach that continues to define the strategy, even during periods when the broader small-cap universe faces headwinds. Now, not every investor wants to depend entirely on equities, and that's precisely where our multi-asset product, Sphere, comes in. Designed as a dynamic multi-asset strategy, Sphere adapts to changing market environments by allocating across equities, debt, and global opportunities. June was relatively muted, with the strategy delivering minus 1.01% compared to 1.49% for the NSE Multi-Asset Index 1. However, looking beyond a single month tells a very different story. Sphere has generated 7.90% over the past year and 19.95% since inception, comfortably ahead of its benchmark. By dynamically allocating across equities, debt, commodities, and global opportunities, Sphere seeks to participate in growth while managing downside risk. Instead of depending on a single asset class, the strategy allows different parts of the portfolio to contribute as market leadership evolves, creating a smoother investment journey over time. Now, that same philosophy of Sphere extends to NEO, our NRI investment opportunity that looks to capture the India story in a single portfolio. Investing from overseas often requires balancing India's growth opportunities with global considerations, and NEO has been built with exactly that objective in mind. By combining equities with debt in global opportunities, the strategy aims to give global investors a more balanced way to participate in India's long-term growth story. Coming to performance, the strategy ended broadly flat for the month of June. Over the past year, NEO has generated 0.84%, and since inception, it has delivered 18.85%, reflecting the benefits of disciplined asset allocation and diversification. So for investors looking to build wealth from a global perspective without losing sight of India's long-term potential, NEO continues to offer that disciplined and well-diversified investment framework. As we move into the second half of 2026, we don't know what the next headline will be. Markets will continue to react to geopolitical developments, earnings announcements, policy decisions, and countless events that none of us can predict with certainty. One thing doesn't need to change with every headline: our investment philosophy. Across Solitaire, TRUBLU, VRDDHI, Sphere, and NEO, we remain focused on identifying quality businesses, managing risk thoughtfully, and staying invested with conviction. Because while headlines create volatility, it is discipline that creates wealth. If you think any of our products align with your needs and investment goals, start a conversation with us today, and we'll see you with the next Factsheet video.